In any bull market, there are always three stages. First, it's ignored. Then there are people getting on board as time moves on. But when enough people pick up on it, we hit a mania of parabolic non-stop rising. Until, of course, it comes tumbling down. You came here for the truth, so let me unveil that for you. Today we're going to look at the markets. Let's begin. I'll show you 4 charts in history starting from 1929 S&P 500. You can see that the price rise in the final phase was 104%, and we're looking at a time frame here of 3.5 years. Notice in 1989 of Japan, you're seeing a 3-year period, final phase 65%. In 2000, the tech bubble, 3.5 years again, about 60%. 2007 housing bubble, 3.5 years. So what we see are these repeated patterns over and over again. We have approximately 3 years and at least 60% in that final phase. What that tells me is that these markets consistently, when they are considered to be overvalued, when the charts are all out of whack, when you're seeing the market psychology totally out in left field, you are seeing nothing making sense at all. When all that's happening, the market still goes on for 60% gains plus, right? Could that happen again today? Well, let's look. According to this report, what it would take to make the S&P 500 a classic bubble, up 60% in the final 21 months. Could you imagine the S&P hitting 3,700 from where it is today before it tumbles down? It's not a stretch of the imagination for some people. Now, I don't even necessarily think that it will stop at 3,700. Why shouldn't the Dow be able to hit 30,000, 40,000, 50,000? As long as interest rates don't rise, and as long as central banks continue to print $200 billion every single month, there's no reason why this can't continue upward. I think people have me confused, and I'm glad that I found this report, because a lot of us, I know that a lot of you will agree with me, we look at the economic indicators, we see it's overvalued, we know what's going to happen at some point. Okay, we see that over and over again. Okay, look at those cases, 4 cases in history where things were way out of whack, but it still went on. It still got a lot more gains in this period of time. But we can see what will happen if that crutch is pulled away from the system. Look, if they're going to print $200 billion a year, you can keep the system going. Of course. Of course you can. At some point, if it starts weakening, all they have to do is reduce interest rates, go into the negative, engage QE4, stocks will keep rising again. Yes, you destroy the currency. That's fine. They don't care about that. They want to destroy the currency because they want a new monetary system. So their goal is ultimately to destroy all currencies. That is part of the plan. Some people get offended by that for some reason, but anyway. Number of days for the Dow to gain 1,000 points. It hit a record here, 23. Imagine that, to go 1,000 points higher. You know, it hit 25,000, and there was never a doubt in my mind that it would do so, because there is the maximum quantity of central bank easing that the world has ever seen on a global scale. That's the difference this time. Yes, there have been countries who have completely hyperinflated their currencies, like the US in history. It happened twice. And this time, however, it's a global phenomenon. You cannot ever see this happening. There have been multiple countries at once, yes, during certain times, but never have all countries done it, and never have central banks become hedge funds, buying up shares, billions and billions of the biggest stocks. The system is completely and utterly rotten to its core. And if you sit there for just a second and take a sniff, it stinks. That's all for this video. Check out the links below. Take care.